I don't want to hear from people saying, well, I need an income to live. Well, sell some of your coins if you have to. They're going up. Don't reach for 5, 6, 7, 8, 9% yields because you're reaching for trouble. A high yield demonstrates high risk. Don't do it. And some of you people who have Swiss franc government bonds should be thinking about converting some of them to more gold and silver related assets, because you're going to need that leverage on the way up with numismatic coins and shares. So think about that. And it's all in. I told you that 2 weeks ago and 3 weeks ago in the International Forecaster and here on this program. It's all in time. And I was right. The market just ran $60, in the last week or so. And this isn't going to stop. I mean, no matter what they do, they're not going to stop this. People all over the world are dumping their currencies to buy gold and silver assets, particularly physical assets. And the United States hasn't even got wind of it yet. I mean, wait till Americans start buying. So you're in early. Got a couple of questions here. The first one is from Joe, and this is for the Dependable Dealing Divas show. You want to repeat that? The Dependable Dealing Divas show for Friday. For Friday. Today's Friday. Okay. You mentioned before you were seeing signs of deflation. I'm confused by all of this. I'm waiting to see the signs of hyperinflation that you speak about. How can we have deflation and hyperinflation at the same time? I can't seem to grasp this concept. I thought we were positioning to brace for the onslaught of massive inflation. Help me, help me. Put this issue to rest. Well, it is always possible that you can have more than one thing happen at one time in the world of finance, or anything for that matter, or almost anything. We have had deflation, the devaluation of assets, for over 5 years, about 5.5 years. And that has been offset during that period of time by the creation of money and credit, and even relatively low interest rates at 4.5% or 5%. Those are relatively low. The creation of money and credit and the somewhat easy rates have offset during that period of time the predominance of deflation. And remember, all the major countries have been doing the same thing, creating money M3-wise at a rate of about 14% annually, when 3.5% to 4% is normal. So we've had simultaneous inflation and deflation. What we're in right now is about a 10% inflation rate, down from 13 5/8. We're going through a short 6-month hiatus, which will end in March or April, when the monetized money that they're giving away, and they are giving it away because they're never going to pay it back, to banks, brokerage firms, insurance companies, which you'll get to pay for, of course. And that'll start showing up in March and April, and all of a sudden, June to the end of the year, you're going to see inflation rocket. It won't be official, but other writers will be talking about it beside me. And that's where hyperinflation begins. And that'll probably run for 2 years, maybe more. And all the currencies will gain against the dollar. The dollar will go down. And then somewhere along the way, from what I can see at this point, I'm guessing, based upon things that have been said by heads of government in France and Germany and England and the United States that they're going to go for a new financial order, which is a one-world currency. And when people realize what they're doing, gold will go berserk, and so will inflation. And all of a sudden, bingo, when they devalue, inflation will end, and we'll have massive deflation. And the people who are in gold are only going to be the only winners. So that's what it's all about. One other question I didn't get to on Wednesday because Melody had so many of them. No comment from the peanut gallery?
No. You jealous? Just kidding.
I sound like Buffalo Bob. You remember that? Howdy doody?
Howdy doody.
And the peanut gallery?
Yes.
You do remember that?
Yes.
Hello?
Yes. I remember seeing pictures.
1948. I know you can remember
pictures.
Anyway, several dire predictions were made last year during the closed-door session of Congress about the imminent collapse of the federal financial system in February of 2009. That's one of those predictions. We know that the economy is now on a slow-burn collapse, as you report. This is from John, incidentally. A several-year process. Do you foresee the manifestation of this February 2009 collapse occurring in a marked way? I can't say. I just asked this same question on another program, and I can't answer it because I don't know. You know, putting time frames on things is not easy, and I don't have a crystal ball. I got to put it all together into a mosaic and then say, this is what's going to happen. We know what they're going to do. I just don't know the timing. It could be February, could be September. It's in the works. Don't worry about it. Take advantage of low gold and silver prices and buy now. Gold is a minimum of a double from here. Where else can you go and make that kind of money in these kind of markets today where everybody is losing? Well, for the last 18 months, the average quality account in stocks has lost 40 to 45%. So doubling your money is pretty good. And if you're in numismatics and shares, you might do a lot better than that. And so that's the way we're headed. I can't give you a time frame. I just don't know, and I don't know that anybody else does. And just do what you have to do. You know what to do. That's the important thing. All over the world, we probably reach, on the radio programs, it's about 20 hours of program I do a week. We probably reach between 30 and 100 million people a month. So we're helping a lot of people. And those people are out there, they're buying hard assets. They're buying gold and silver. And you better be doing the same thing. Because you don't really care when it happens. You know it's going to happen. And so just participate. Don't worry about the timing. Just do what you're supposed to do. And there's only a handful of people in this world who are talking about gold and silver related assets. And so we're at the very, very, very beginning of Phase 2. Phase 1 was fantastic. I mean, back when, let's say, gold was $270. You bought an MS-64 St. Gaudens graded mint state coin. What did they cost, Melody? About
$400.
$400. What are they today?
Over 15.
There you go. And that's going to double and double and double. And the premiums are going to get higher and higher because there's a limited supply. But they got to be graded in mint-state. You buy numismatic coins that are circulated, AU, BU, VF, and so on. Tell them what's going to happen to them. Tell them what happens to them when they buy them and when they sell them.
You get bigger premiums than what I charge on my $20 gold pieces that are certified. It's an easy pitch to tell you. You buy them like you buy them like bullion coins, but they're numismatics, and basically all you're going to get is the melt value out of there. When we have a strong demand, you might see that premium increase a little bit, but there's